There we go. Hello, everyone. Welcome to the 19th episode of Blockchain Talks. Today's episode, we are, as per regular, going to take a look at the current state of the Bitcoin or, in general, crypto market. A special dedicated topic today concerning Ethereum. Lately, due to the, present bull market, as you can see here on screen, a lot of questions have arisen. Ethereum has reached a new all-time high quite recently, today or yesterday, if I'm not mistaken. Yeah, so it reached a new all-time high. But people are saying, yeah, Ethereum has a bright future. Why is there so much hate? Why is there, such negative connotations to it? People who follow my channel know I'm not not a very much outspoken fan of Ethereum, much having to do with, the recent updates that occurred in the last couple of months. More on that later. We're just going to see how the market is performing. Well, the market, quite frankly, is performing very well. As you can see on the 24-hour trading, it reached up towards, it broke all-time high here earlier in the early morning here in Europe, Belgium, at about 5 o'clock in the morning, where it managed to break through the 68K up until 68.5K level. So new all-time highs in. Seems to be trading relatively stable during the span of this day. Take a look and zoom out in the last 7 days and 14 days. So as you can see, was a little downtrend, a little bit of accumulation going on here, and sudden upsurge, two big ones here. This yesterday, Monday, span of an hour or so, and then once again late in the evening, so Monday passing on to Tuesday. So American or Chinese markets are waking up. Day volume, as you can see, things are stabilizing. In episode of last week, if I'm not mistaken, I said, probably the range we will be trading in is here between 60,000 to 65,000. As you can see, a little breakthrough here on the 14-day range. Same applies here, actually, on the 30-day range. You can see since, early October, we are trading within range, but only now broke through. There was a little fake out, I dare say, into the higher reaches, somewhere near the end of October 20th. Like I said, in order to sustain this run, I want to see it trade above 65K level consistently. So same is going to apply here. This can be a fake breakout, I do not know. Currently on 24-hour trading chart, it's relatively stable. I do not see immediate downward pressure. However, I can see here upward pressure in trading. However, I'm going to repeat the same remark as I did here. In order for a bullish continuation, I want to see trade continuously above, this time the 65K level. Exceptions can occur, like this one here, for some time. How many days? 2 days approximately. Was trading above it before it came crashing down and trading within range. So in order for bullish continuation, in order to see the 70K margin being broken, I want to see it trade above the 65K level consistently. However, there is good news. This month, finally, and in the episodes from September, October, I've been rehearsing this. There will be the Taproot update for Bitcoin, which allows more transactions to be saved per block, so has transaction times, and that's actually a very bullish signal, for the entire crypto community and for Bitcoin itself. So we might see higher trading ranges in the forthcoming days. The guys from Cultivate Crypto said, take a good eye at around the 11th of November, by reason they estimate, a big bullish uptick during that time period, during that day. So I'm going to believe them because when considering the charts on the long term, and in my mind with all the news backing it, so with that I want to say the prolonged accumulation phase, as you can see here, together with the Taproot update, the mass adoption like MasterCard, Tesla, once again accepting Bitcoin payments, etc., are actually very bullish signals, very bullish news. So yeah, I more or less follow them, and the 11th of November, it might not be exactly that date, might take a few days in surplus, but in general, the month of November probably is going to be a very great month for the entire crypto community. I'm also going to be honest here. I always said, and I still stick by those words, I do not see Bitcoin breaking the 100K level by the end of this year. However, I'm holding my heart that my prediction will come true. If it isn't the case, well, I'll still be very happy because I've got a lot of Bitcoin bags. But yeah, it means I must adjust my strategies and more closely inspect and keep an eye on Bitcoin itself. But would be happy if it broke the 100K, though I suspect it's going to be something for next year. However, there are a lot of bullish signals, and well, the market, it wouldn't be the first time it takes us by surprise here. So yeah, that's a little bit current Bitcoin news, market news here. Naturally, this implies, it's a little bit in red, but as you can see, overall trend is upwards. Well, everything is going up nicely. Exception here, Shiba Inu, which, well, received quite some blows. Now, I've always learned to not kick down an opponent when he's already done, and always be gentle, not to wish ill upon people. However, I'm not ashamed to admit I'm more or less happy to see they remain stable here and not having the same meteoric rise as other coins here. Not so much because there's some inherent hate to Shiba Inu, but the reason is it is overhyped and oversold without having a real use case. A lot of people got wrecked. I'm going to open up the chart here. In the last couple of days, as you can see here, lost quite a lot of their investors. Naturally, there was a nice buy up here, probably some bullish news, but a lot of people are losing money, and unless you bought up until this point, well, you are in profit and probably had to sell here. So yeah, things aren't looking all too good. Naturally, people say, oh, look at the amount of percentage. Yeah, but you know, it's quite a young coin. So anyway, Shiba Inu, nothing much to tell about it really. I sincerely hope people can still sell off and make decent profit here. By reason, I'm afraid, I'm not afraid, I'm fairly certain it's going to be like Dogecoin. It is an inflationary coin, so there's no limited supply. It's unlimited supply. It's inflationary by nature. So take your profit, guys, and invest it in a worthwhile coin like Bitcoin, Solana, for example. Yeah, Ethereum, not immediately. You will know why when I start the main topic. Chainlink, Polkadot, Ravencoin, those kind of decent coins with a decent use case. Don't ape into shit coins, please. And yes, I know it has got a big wild market cap, but trust me, that's one of those coins within the forthcoming years, it will come crashing down tremendously. Anyway, let's get to the main topic here, mainly called Ethereum. As you guys can see, it's performing fairly well, especially on 24-hour trading chart, 7-day, 14-day, 30-day. So it is in a consistent uptick. And well, being a trader myself, not an active trader, I'm more of a hodler, holder of cryptocurrency. There is, well, how to say, an inconvenient truth here. And everything has to do with an update which occurred in August of this year. As you can see, there's a nice uptick, consistent growth since, well, the beginning of late September, beginning of October. Very nice uptick here. Does this come to be? Well, all comes down to the London hard fork. That's an update which was launched this year, 5th of August. What is the London hard fork? Well, as you guys know, Ethereum is trying to, well, change its protocol, and with that I mean its its consensus protocol. So currently it's still on proof of work based blockchain, but they want to transcend into a proof of stake. By reason proof of stake, well, it enables higher scalability, faster confirmation times. It helps growing the network and is actually a better choice as a consensus protocol for their use case. Naturally, Ethereum is an inflationary coin. There is no max supply, unlike Bitcoin, which has 21 million coins. Ethereum has no max cap. So the amount of coins to ever be produced is infinite. A good choice, in my opinion, if your use case, which is the case with Ethereum, is a decentralized application developer platform, meaning, well, it's a platform whereupon you can start developing decentralized applications. Naturally, in order to fuel the network, you will need to you will need coins and tokens in order to pay fees and actually have some kind of governance system. Naturally, you want it to remain sustainable for the indefinite future, so no real hard cap is a must. By reason infinity, an infinite amount of coins available. By reason, well, with that amount, well, with that infinite amount, well, unlimited amount of, well, projects can be built on the Ethereum blockchain, and there's always enough liquidity present in order to build, develop, and operate. That's the basis to it. Now, Ethereum, especially in the last couple of months, I'm not all too big of a fan of. By reason, well, for starters, they are, I'm going to start at the basis here. They pride themselves, their use case, on being, well, a decentralized application development platform. Naturally, that's a very nice use case. I support that use case. However, everything falls down to the technology backing the platform, backing, well, making part and helping to develop the platform itself, supporting the use case. That's the word I was looking for. If you have a use case in mind and you start developing with blockchain technology, well, the choice of consensus protocol is of utmost importance. By reason, that's the very foundation, the very layer upon which your network will rely. A flawed consensus protocol can actually let your entire use case and entire network fail. And this is more or less the case with Ethereum. By reason, Ethereum is actually nothing more than stolen code from Bitcoin. With adjustments made, they removed the limited amount of coins to ever be produced and made it unlimited, and made a few other tweaks. Naturally, these other tweaks, and that's where Ethereum has been renowned for, are layer 2 solutions. So what are layer 2 solutions? In very short terms, that's a parallel chain built and connected upon the base chain. So if you have Bitcoin, for example, you have as a second layer solution the Lightning Network. The Lightning Network is, well, some kind of network which helps to speed up Bitcoin transactions by grouping certain transactions together and then saving them onto the base blockchain of Bitcoin. Ethereum does the same thing. However, it's got its base layer, so its base proof of work consensus protocol based layer, blockchain, I'm going to say. But around it, various layers exist, layers for the projects being built upon it so that they can interact. There's another layer launched last year, which is their beacon chain in order to transcend towards the proof of stake consensus protocol. And the beacon chain is nothing more than a second layer solution connected with the base layer with what they call beacons. And that the purpose of that layer is to transcend into proof of stake so that all Ethereum already present on the base layer can easily be, well, transferred towards the new layer and that the second layer solution of Ethereum, the beacon chain, actually becomes the main chain and the other one is discarded. That's layer 2 solutions. Now, in order to provide updates on their blockchain, well, Ethereum makes quite a lot of use of, well, layer 2 solutions. And, well, one of them is this one, the London hard fork. That's actually some kind of layer 2 solution incepted and, well, activated 5th of August of this year. And what does the London hard fork do? Well, it's actually a very major update. In concise terms, I'm going to say it boils down to solving the problem of high transaction fees and gas fees. By reason, well, no, not, sorry, the direct result are the gas fees and transaction fees. I'm mistaking here. You can see this is unscripted here. So where was I? Yeah, the London hard fork. The London hard fork was actually a layer 2 solution implemented in order to, well, more or less pump the value of Ethereum in covered terms. How do you mean to pump up the value of Ethereum? Well, regarding Ethereum having an unlimited supply of coins, well, its value is going to be inflationary over time, meaning, well, it will lose purchasing value. Naturally, if you want your blockchain to be of interest to a multitude of traders and investors, you want your coins to appreciate in value over time. The London hard fork is going to burn Ethereum. That's basically what it's going to do. And naturally, in more covered terms and for the more technological apt persons, there are other updates whereby they can more easily predict the transaction and gas fees and trying to stabilize them. By reason, well, since launching the beacon chain, an obvious fault or flaw within the Ethereum mechanism has been detected, meaning the more transactions are being made, the higher the transaction and gas fees are. Meaning, so if there's more trading on the Ethereum blockchain, well, gas fees start to rise meteorologically. Damn it, I can't pronounce it. Start to rise tremendously. Period. So it started to rise tremendously. And, well, in the months before the update, the Ethereum developers, well, were blaming the miners for the meteoric rise of gas and transaction fees, saying, yeah, the miners are getting greedy, and in order to pick up the transactions made and have them loaded faster onto the blockchain, well, transaction fees need to increase. That's actually a base mechanism pertaining to their base chain, but they were blaming the miners as if it was a conscious effort, which wasn't the case. So they launched the London hard fork, and the London hard fork implements, well, a mechanism trying to stabilize, well, the high gas and transaction fees that come with traditional bull run or when more and more people are trading Ethereum. It's a natural cycle. However, the problem with the London hard fork here is that they naturally implemented a mechanism but didn't address the base problem. The base problem being, well, the Ethereum blocks on their blockchain are too small to save up all transactions made. So in order for your transaction to be saved, well, transaction fees goes up. The problem here is that isn't addressed here. And in order to punish the miners severely and more interesting, well, you can see they said here, making fees more predictable. The London hard fork also starts burning Ethereum. So all transaction fees no longer go to the miners, which is the case with, well, almost any other blockchain, but the transaction and gas fees this time are getting burned. So it implies each time you make a transaction and pay the price, that one, well, the transaction fee isn't going to the miners or people supporting the network. It is redirected towards a closed wallet, a burn wallet, like they say. No one has theoretically has access to it. No one does. And the coins remain there indefinitely. They are out of circulation. Naturally, this implies it's a deflationary mechanism being implemented on the Ethereum blockchain. However, people who take notice of my words start seeing the problem here. I'm going to hide all here, spamming a little bit. So they start noticing the problem. The main problem wasn't addressed, that of block size, sorry. And gas and transaction fees, especially during a bull run, keep on increasing. Just to make sure you guys understand what I'm talking about here. This is an Etherscan Ethereum gas tracker. So it tracks the amount of fee, the price of gas fees, transaction fees. You can see here, low priority at its base cost 132 GWei or $12.19, average 12.19 every 30 seconds, base 115, GWei 123 GWei, etc. Priority 8. So these are indications of how important the transaction is. These are indications, well, they say this is the base you should pay, and that's priority. So in total, 125 GWei. Checks out. Same here, but those prices are actually quite high. They say 12.19, not correct. In reality, when you're transferring tokens, the price is increasing, and you need to, well, translate it towards US dollars. For a simple ERC20 transfer, so an ERC token, which is a token making use of the Ethereum blockchain, well, transfer will cost that amount of money, low, average, high. At this point in time, they all check out, which is kind of odd. There was some differences here. Yeah, I refresh every so often. Anyway, but as you can see, prices here are increasing. At the moment, they are lowish, I dare say. Early on today, I saw here 150 USD dollars. Probably the market's waking up and that the amount of transfers are going, well, are lower at this current time. As you can see here, those are a lot of money. So imagine this, if you will. You have got a token being built on the Ethereum blockchain. If you are a small-time investor, you put in 100 US dollars. That's the appreciation, and now you want to sell off your coins. Well, in order to transfer your coins, this is the price you will be needing to pay. That's about 1/3 of the money you invested in that you are losing towards transaction fees. That's a tremendous amount. That's only one transfer from, for example, the hardware wallet towards the exchange. Now, the exchange themselves also have, well, transaction fees, so it might be the case this can be doubled. And that's actually what happens here with the Uniswap swap. The culmination of transfer from hardware towards their exchange, and their exchange once again swapping it towards another coin. That's the base fee. So you only have $8. That's, well, bad. In short, if you see these numbers, it implies anything beneath it that you have in Ethereum or in value expressed in other coins. So, for example, if you have got a imagine Chainlink being built on Ethereum, and you only have $10 worth of Chainlink, you cannot sell it. So a lot of people have small amounts of coins available against very low prices. So, for example, they've got 50 USD dollar worth of Ethereum 100, etc. Well, regarding this, some of them can't move their Ethereum. That's Ethereum pulled out of circulation, that remains in stasis. People cannot trade it. And that's very problematic and actually results in this meteoric rise. By reason, well, if a bullish cycle occurs, well, more trades are being made. People want to take profit, even on the very small numbers. Say, for example, on the 50 USD dollar in value of Ethereum you have, you see, oh, it's now 55. I'm going to take a quick profit now because I've bought it at, I don't know, $10 or something. Well, they can't by reason the transfer fees, especially here with the ERC20, will gobble up half your profits already. People won't move it by saying, yeah, okay, I'm going to lose quite a lot here, meaning it gets out of circulation, but it implies, as it's a deflationary mechanism, as incepted by the London hard fork, well, that's out of circulation, and less Ethereum is going round. People might say, yeah, okay, it implies this is going upward, but more and more people are trading. What pushes this upward? Well, the burn. People still try to transfer their Ethereum. Some of them might say, okay, it's too much, I keep it out of circulation. That implies that's Ethereum that cannot be sold anymore. So it exists, but can't move. It's out of circulation, meaning the total circulating supply is in reality much less. However, there are plenty of tokens built on the Ethereum blockchain, and naturally plenty of services, and I'm thinking about the NFT market. Well, in order to move your NFTs, so your non-fungible tokens, your crypto art, let's say, well, you also need to pay base fees. You need to, well, invest some Ethereum, and that Ethereum makes up naturally the value of your NFT, but in reality is getting burned badly. And that's something generally, if Binance, Coinbase, where was it? Gas guzzlers. Generally here on this website, you can easily see who the big gas guzzlers are. You can see here Shiba Inu, Sushi Schwab. So those are all, oh, here it is, OpenSea. That's an NFT marketplace, meaning, well, quite a lot of money, quite a lot of Ethereum is being burned for the creation and transferring of NFTs. It's quite high. And there's ENS token, Uniswap, Tether, etc., etc. So these are the exchanges and platforms where a lot of Ethereum is being burned, meaning a lot of Ethereum is leaving the market straight into that closed wallet. It is being burned, becoming inaccessible. And people might say, yeah, but who's crazy enough to pay those transaction fees? Well, people being busy themselves with NFTs, or people with enough money and Ethereum in order to cover the costs. Currently, well, I'm going to believe the majority of them will be Ethereum miners, meaning, well, they are taking profits hitherto and saying, okay, yeah, I've got 5 Ethereum, I'm going to cash in. That's about 20K USD dollars. But the gas fees, yeah, I know it will probably take up a few hundreds. They can afford it. Smaller players, if you're playing within the range of a few hundred USD dollars, well, people are going to say it's not worth it. The base fee I need to pay is way too high. I'm losing money. I'm losing my profits here. So that remains inactive. So at this point in time, that which burns Ethereum are the big players. And with that, I dare say, as you can see here, Uniswap, OpenSea, those are all platforms, decentralized platforms, decentralized exchange platforms being built on Ethereum, NFT platforms, etc. You can see big players like the USD coin. You can see here ENS token, all related towards trading platforms, really. So it's burning the Ethereum, and that's actually pushing its value upwards. Is it a good signal? In my opinion, no. By reason, this is a result of a broken mechanic, this meteoric rise of Ethereum. A broken mechanic of the London hard fork. It's not because more and more people are appreciating Ethereum. No, it's appreciating in value due to the brokenness of its blockchain. And that's one of the reasons why I'm wary to promote Ethereum. It's broken at its base, and it is actually fueling its rise in value because due to its brokenness. And this is actually a little bit weird to say that something is rising because it is broken. I'm very sure there's some Chinese philosophical stance that can be taken here, but I'm going to say do not invest in Ethereum if you keep it in a hardware wallet. You can still trade Ethereum but be smart and leave your Ethereum on an exchange. Leave it on something like Coinbase, Binance, and when the time's right, sell it off immediately. Where it concerns the sell-off, I've seen numbers ranging, of Ethereum towards next year ranging into the 10 to 11K value. Myself, I'm going to wait until it launches its proof of stake based network, so that it's fully proof of stake. From that point on, I'm positively sure we are within the 10K to 11K reach, and that's actually the best time to take your profit and just dump Ethereum. By reason, well, people say there are plenty of good applications being built on Ethereum. Many of them, due to the high transaction fees, are looking for alternatives. They are actually slowly leaving Ethereum, and currently that which pushes Ethereum upward aren't so much, the coins and tokens being built upon it. It's mostly their own marketplaces like OpenSea, etc., pushing the value upwards, and which are the big token burners. As soon as those projects leave, we might see a tremendous crash of Ethereum occurring. So, in a short synopsis here, Ethereum is broken due to its London hard fork. Transaction and gas fees will keep on rising during a bullish cycle. By reason, the London hard fork never really addressed the core issue of, the broken gas fees, which was block size. London hard fork only implemented a burning mechanism on the Ethereum blockchain, whereby less and less Ethereum is in circulation. However, the mechanism for pushing down gas fees and transaction fees hasn't been solved, and due to that, we see this meteoric rise, which conveniently runs parallel with the Bitcoin bullish cycle. So with that, I'm going to stop sharing my screen. I'm going to stop my little rant here. So I hope you guys learned something new here, and up until next time, into the next episode. It was Dimitri from Gracious Interest. Thank you guys for watching. If you like this live stream, please like and subscribe. If you want to support me, there's links down below in this video buy my courses, etc., or share this channel, whatever. So once again, thank you guys for watching, and until next time. Bye.